So hey guys, welcome back to another video. So in today's video we are going to do a review of euro dollar, that what's going on, and today is Wednesday, so let's see what's going on in euro dollar. So welcome back to my channel. So this is a euro dollar chart, and as you guys can see in my video which I did it on Monday, I guess. Like in that video I was bearish because if you guys see at weekly time frame like this, on weekly time frame last week was bearish, so I thought like this week can also be bearish, but I was totally wrong, and I shifted my bias from bearish to bullish. And why? As you guys can see, Tuesday was totally bullish, and I wanted to see that price should go down and tap this candle's high, like this day's high. Okay, why? Because there was an imbalance left in between of the opening of this candle and like the high of this day. So to fill that imbalance, market goes and fills the whole imbalance, and then it goes with the direction, with the bias which is going on in the market right now. But I was wrong. If you look at in 1h time frame, if you guys can see, in my last video I was looking for this, like I thought like this is supply zone, okay, and market will go up and then it will keep on falling, but it didn't happen. Okay, it just kept on going up and up, and it hit my stop loss because I took a sell from this 600, and my stop loss was at this 115,800. You can see the value over here. Okay, and when my stop loss was hit, I stopped right over there, and I thought like, yo, I got my bias wrong, so I should wait this day and let's see what happens tomorrow. Then I saw that that Tuesday's market closed over here. Okay, and like the day before previous day, like on Friday, like Monday was nothing, like it just did the consolidation and it didn't make something new, like it didn't broke the highs and the lows of the previous day. So like, but I thought so, like if price goes down and taps this high, okay, that's the point where I can see that whole imbalance is filled. And I saw a thing which is like like a liquidity which algorithm made over here. So if you guys can see that this candle over here, okay, this candle will be a demand zone for lots of traders, okay, for new traders. Okay, so now I can see that from that this demand zone price moved once like from here. So now people will be expecting that price will go again high after tapping this like this demand zone. Okay, so I said, okay, my higher time frame narrative is now bullish because of the Tuesday move. Okay, and my weekly bias was wrong, so I will go with the daily bias. And now I can see another thing is that there's a liquidity over here, right? There's liquidity over here which was formed on Tuesday, so there will be lots of stop losses below the structural low, right? So that's why what I did was, and there was this round psychological number also, 1.5500, like that's the round psychological number, institutional number, right? So that's an institutional level, so that was a really good place to get into the market. I just placed my buy limit over there, and my stop loss is 15 pips. Okay, my stop loss is below this structural low. Okay, and my target is 1:2, and it's still close to that take profit. But right now I closed my all of the positions because when I saw price took this high, okay, then I can see that the price has taken the buy side liquidity. Okay, so now price can go anywhere, but my target was 1:2, if you guys can see over here. So the thing is, like on Monday it didn't move anything, it didn't did anything, but on Tuesday it really moved really well, and I thought like price will go down, but it just went straight into my stop loss, right? And I took one L over here, and then today I bought it from here, and then price went up. So now the thing is that if you guys can see over here, that the thing is, when I lost, when I got a L over here, it was like only 1 hour, okay, like one risk reward. And when I won over here, okay, it's like 1:2, right? So like that's the difference. Now you guys will be thinking that 1 hour is really low. Okay, I only target for 3 hour or 2 hour in a week, like that's my target. So in monthly I can go 8 hour or like 8%, like not even 6%, 6 to 8. I know it's low, but it's realistic. Okay, because any trader who is really is he's like advanced trader, or like the trader who is in the markets for like more than 3 or 4 years, he knows like 6% is also hard to make in the markets in a month. Okay, if you're making 6% consistently for a year, it's 66%, so like you made more than half of your capital, right? Like that's a really good return in the market. and like you can make more if you risk more, but I risk low because I have to be consistent with it. Okay, so you guys can see that this was the move over here. So what's this bad, like this move, like this is a 3-day relation theory. Okay, so the 3-day relation theory means whenever you will see this type of candle over here. Okay, now let's mark it. Wait, I should remove this and should remove this also. Okay, now let's see. Yeah, okay, now you have to, I'm marking the levels, which is really important in this thing. Okay, I already taught this before in my channel, but I'm doing it once again. So you guys can see that on Monday it was in the range of this day. Okay, it was within the range of this day's high and low, like it was in the middle. Okay, but on Tuesday it made a move, right? It made a move, it opened over here, it made a low over here, so it was the accumulation, and it manipulated right away. This was the manipulation, this week was the manipulation. Okay, and then there was a distribution, and then it made a high of the day, and then it closed over here. Okay, now there is big imbalance over here. Okay, now let's think about, like, if market would have not gone below to tap this high, if market would have done this instead of going down like this. Okay, if market would have done this, okay, instead of just think like there was this instead of this candle there was this candle. Okay, so there would have been a gap in between over here. Okay, so now you can see that there is a gap between over here. So now let's remove this. So because of that, if there is no, like, because of that, right, there should not be gap left in the market, like there should not be more imbalance, because price always fills the imbalance and then goes to the liquidity, and then it makes imbalance, fills imbalance, makes imbalance, like that's how it goes. Okay, so that's why I did that thing, and now I think so price will tap this high once again, and then it will go high. Okay, it can go deep, a little bit deep, like it can go 50% of the range, like this over here. Okay, it can go till 50%, but main I think main level will be this. What 1150008, this will be the main level. Okay, why this will be the main level? Because you can see 1.15800. Okay, there was this one big level over here around psychological. These are the bank levels. These are the levels where the big transactions happen, because they want an even number to do a big transaction or to exchange euro from dollar. So that's why, like this, from this type of round, you can call them bank level or like institution level, like from these levels market fluctuates, like it makes some move from these levels. Okay, why? Because this is a round figure number, and people love to exchange their money from euro to dollar on a round figure number, right? Not people, like banks. Why? Because it will be easy for them to calculate the amount, the exact amount. It will be easy for them, so that's why they set their limits on this type of round psychological numbers. So you can see a good move from these levels. Okay, and if you want another video on it, I can make it. So now let's look at over here. I think so price will come at this level, like this is my last. Okay, it can come till over here, like 50% of this range, but I think so price can come down, tap this high, and then it can keep on going up, or it can come and tap this 1.15800 level, and then it can keep on going up. So like that's what my thinking is for now, and I can be wrong also, like the way I was wrong on Tuesday, but today on Wednesday it helped me a lot, like I made something from this. So this is a 3-day relation theory. Okay, to fill the imbalance on daily time frame, like each candle, 3-day candle theory, price comes down to tap that high, and it happens in everywhere. Like you can look at over here also. This happens like most of the times, like once it happened over here in this thing, it went a little bit deeper, and now over here it left a gap over here, if you guys can see. So that's why I think so it left a gap, and there was this liquidity over here also, and I don't know why it's going high. Okay, that's that. I should be true, like I don't know why it's going up. I think so it's going up because overall bias is bullish, that's why. Okay, or it's going high because of I don't know. The thing which I know is that, like, previous day was bullish, so that's why I was bullish today. That's why my short-term trend, my short-term bias was bullish for the day. Okay, and now I think so price will go high after tapping this high, or it can go down and take this low. Nobody knows. Okay, so that's why I'm saying, and I think so the main target will be these highs over here. these two double tops will be the target for the market to go and tap. Right now this happens every day. Like if you look at over here, this candle closed in the candle this candle's range, right? So we will take this candle's high over here, that will be the main level for us, and this candle's low. So this candle closed outside of the range of this candle. So now what's left over here? There's an imbalance. Okay, price came down, filled the imbalance. When price taps this line, that's the point where you will look for your entries on a smaller time frames. Okay, and now it went up from here like this. On next day also it went up from here. I should mark, wait. Okay, it went up from here and then it kept going. And you can be wrong also on this type of days. Like you, who knows, you might have taken a buy at this level. Okay, you took a buy over here and then what happens? Market falls down and you it will hit your stop loss, but overall you will be in profit. Okay, but sometimes you will hit losses also, like the way it happened over here. Okay, I was thinking that price will take these three highs and then it will fall down, but it's going different sides, so I will go with the markets. Like that's the main rule in the trading. You should always go with the markets. Like you should always go with the market maker, like what he's doing. You should know about that. And now let's look into gold. Like on gold also, in my last video I told you that I am bullish on gold. So now you can see that market is going high. Okay, and I told you guys that I can take a buy if price comes and taps this candle's high. If you look into my last video, okay, you can see that I told that it will come down and tap, but it tapped this candle's high and now it's going up. So it didn't tap my, what do you call it, the level on like one buy limit. So now went down, tapped on this high. I think so. No, it's not that. It's different. Yeah, that's why it tapped this candle's high and then it went up. So now it will keep on going up till it goes and takes this high first, and then you can see some sort of correction, and then it will keep on going up, and then it will take this high out, and then it can fall. Okay, now let's go on Nasdaq. Yeah, so on Nasdaq also, it's the thing which I told you is happening. You can see that this candle closed in this candle's range, but this candle was Monday. On Tuesday it came down till this candle's high. Okay, and then it shorts towards the upside. And now on Wednesday, today was also bullish. If you guys can see, this was also bullish candle, right? And it will be bullish till price goes and takes this high first. Okay, till that, or after that it can go and take this high. But this is the three-day relation theory, like three candle theory. Okay, it can be, it should be on higher time frame. You should not do it in smaller time frame. You can do it on smaller time frames also, but you should be fast enough to make decisions, right? Like on 1 minute time frame or 5 minute time frame, you are like on 15-minute time frame you are doing this, like, but you should be fast enough. So I should show you this, like on 15-minute also. But you will, like if you are trading, if you're doing this three candle theory thing in smaller time frame, then there will be more chances of you ending up taking more trades, and you will end up doing over trading, and it will mess up your risk management. So if you look into this in 15-minute time frame, if you want to do that 3-day candle relation theory, whatever, like, then you can see that this candle went up and closed outside of this candle's range. Then you will wait for the price to come down to tap this high. You will take a buy over here, and the stop loss will be below the structural low over here. Okay, and then your target will be this candle's high. So like this, what your trade will look like this, and your target will be 1:2 on smaller time frames. But I use this to know the bias, like day-to-day bias or short-term trend only. So I hope you guys like this video. So if you guys like this video, drop a like, share it with your friends, and subscribe for more content like this. And I will keep on making the videos. Like, let's see what happens tomorrow in euro dollar. Okay, I hope so. I will make a video tomorrow that what happened on Wednesday, on Thursday. Okay, and then I think so, because the main, I told you that Tuesday, Wednesday and Thursday, like these 3 days, you should, I think so, as in my perspective, in and according to my strategy or according to my experience, these 3 days goes with the main direction. Like these 3 days are the decision maker, and these 3 days expands a lot, and it has a really big moves in these 3 days. Monday, you can call it, it's like manipulation, or with the it will be consolidation, and on Friday it will be correction. So like this how it goes. Like this is a Monday open, it will make a false narrative that it's going down. On Tuesday it will go a little bit up, people still they will be thinking that it will go down, and on Wednesday it will be a big move. Okay, and then on Thursday also it will make a big move, and then on Friday it will be a correction. Okay, so this was the open, this was the low, this was the high, and this was the close. Okay, so how this candle will look like in the market, so it will look like somewhere around like this how it will look. My drawing is like this how it will look, candle. Okay, so that's why I think so. Let's see what happens tomorrow. So until next time, wish you good luck, and bye bye.